What does financial freedom mean to you? Is it the ability to travel the world or to retire early and enjoy life on your terms? Financial freedom is not about being wealthy but having the resources to live life your way, without the concern of bills or paychecks. The key to attaining it is through smart and consistent investment strategies. Investing isn't a quick rich scheme, it requires discipline, patience, and knowledge. It involves understanding the market, assessing risks, and making informed decisions. Even small investments can grow into a substantial sum over time with compound interest. However, investing is not without challenges. It needs the right knowledge, a disciplined approach, and patience. Like building a skyscraper, wealth building requires a strong foundation, a solid plan, and lots of time. Let's navigate finance's complex world and lay the stepping stones to financial freedom. Financial freedom is not a dream, but a journey that requires planning and dedication. And the journey of 1,000 miles begins with a single step. So, let's take that step today. To build wealth, it's necessary to understand the different investment strategies available and how they can contribute to your financial growth. Let's dive right in. First up, stocks. Stocks represent ownership in a company and give you a claim on part of the company's assets and earnings. When you buy stocks, you're essentially betting on the company's success. If the company does well, so does your investment. Then we have bonds. When you purchase a bond, you're essentially lending money to a company or government for a set period of time. In return, you receive interest on your loan and eventually get your initial investment back. Next up are mutual funds. A mutual fund is a type of financial vehicle made up of a pool of money collected from many investors to invest in securities like stocks, bonds, and other assets. Mutual funds are operated by professional money managers who allocate the fund's assets and attempt to produce capital gains for the fund's investors. Now let's talk about real estate. This involves purchasing property, either to rent out for a steady stream of income or to resell for a profit. Real estate can be a solid investment strategy if you do your homework and understand the market. Last, but certainly not least, we have cryptocurrencies. These digital assets use cryptography to secure transactions and control the creation of new units. Cryptocurrencies like Bitcoin and Ethereum have gained significant popularity in recent years and can be a high-risk, high-reward investment. But remember, it's all about diversification. Don't put all your eggs in one basket. Spread your investments across different asset classes to mitigate risk and increase potential returns. Risk management is another crucial part of investing. It's about identifying, assessing, and understanding the risks involved in your investment decisions and taking appropriate actions to minimize potential losses. Remember, every investment strategy has its pros and cons, and what works for one may not work for another. So, take the time to learn, understand, and choose the strategy that best aligns with your financial goals and risk tolerance. Scene script. Stocks and bonds have long been the traditional path to wealth creation. But how do they work? Well, let's start with stocks. When you buy a stock, you're essentially buying a small piece of a company. Imagine it like this. A company is a giant pie, and each stock is a slice of that pie. The more slices you have, the bigger your share of the pie. As the company grows and becomes more profitable, the value of your slice increases. That's how you make money. But remember, the opposite can also happen. If the company doesn't do well, the value of your share may decrease. Now let's shift gears and talk about bonds. Unlike stocks, bonds are not about ownership. Instead, think of a bond as a loan that you're giving to a company or government. In return for this loan, the borrower promises to pay you back the amount you lent plus interest at a certain date in the future. The attraction of bonds lies in their relative safety compared to stocks. While the returns may not be as high, the risk of losing your investment is significantly lower. So, how can stocks and bonds contribute to wealth building? Well, it's all about creating a balanced portfolio. Stocks offer the potential for high returns, but they come with a higher level of risk. Bonds, on the other hand, provide steady, predictable returns with less risk. By combining these two in a portfolio, you can balance out the risk and reward, potentially growing your wealth over time. But let's be clear, investing in stocks and bonds is not a get-rich-quick scheme. It requires patience, a keen understanding of the market, and the ability to ride out the inevitable ups and downs. It's about playing the long game, not chasing quick wins. Investing in stocks and bonds can be a great way to build wealth over time, but it requires patience and a keen understanding of the market. So, if you're ready to take the plunge, remember to do your research, stay patient, and keep your eyes on the prize, financial independence. Beyond stocks and bonds, real estate and cryptocurrency have emerged as new age wealth builders. But are they right for you? Let's dive into these intriguing avenues of investment and see what they have to offer. Real estate, a tangible asset, has long been a go-to for savvy investors. It offers the potential for both income and appreciation. When you invest in real estate, you're purchasing physical land or property. Some people choose to invest in real estate for the cash flow, while others aim to make a profit by selling the property after it has increased in value. However, real estate isn't without its drawbacks. It requires a significant upfront investment and isn't as liquid as stocks or bonds. Plus, managing properties can be a time-consuming task. Nevertheless, with a well-researched strategy, real estate can be a lucrative and stable investment. On the other hand, we have cryptocurrency, a digital asset that's taking the world by storm. Cryptocurrencies like Bitcoin and Ethereum operate on technology called blockchain, which is a decentralized system spreading across many computers that manage and record transactions. Investing in cryptocurrency can yield high returns, and given its digital nature, it's much easier to buy, sell, and store than real estate. However, the crypto market is highly volatile, with prices that can skyrocket or plummet overnight. It's a high-reward, high-risk game, making it essential to understand the market before jumping in. While real estate and cryptocurrency seem worlds apart, they do share common ground. Both are assets that can appreciate over time, providing opportunities for significant returns. And both require a certain degree of knowledge and understanding to navigate successfully. The choice between real estate and cryptocurrency, or the decision to invest in both, depends on your financial goals, risk tolerance, and investment strategy. It's important to remember that all investments come with risks, and it's crucial to do your research, and perhaps even seek advice from financial advisors. With the right knowledge and due diligence, real estate and cryptocurrency can be powerful tools for wealth creation. So, are you ready to explore these new age wealth builders? The journey to financial freedom is not a sprint but a marathon. It requires consistent effort, discipline, and smart financial decisions. So, let's take a moment to reflect on the journey we've traversed thus far. We've explored the concept of financial independence, the freedom it grants us, and its transformative powers on our lives. We've dived into the world of investment strategies, understanding the importance of having a plan and sticking to it. We've examined the traditional path to wealth via stocks and bonds, and the potential they hold for long-term growth. And we've ventured into the realms of real estate and cryptocurrency, the new age wealth builders that are reshaping the financial landscape. Whether you prefer the stability of stocks and bonds, the tangibility of real estate, or the dynamism of cryptocurrency, the key is to diversify. Spread your investments across different assets, sectors, and regions. This not only maximizes your potential returns, but also insulates you against the inherent risks of investing. Remember, putting all your eggs in one basket is a gamble, not an investment strategy. Moreover, understand that risk management is a crucial part of the journey. It's not about avoiding risks, but about knowing how much risk you can afford to take. It's about balancing your desire for growth with your need for security. And it's about making informed decisions based on thorough research and a clear understanding of your financial goals. But perhaps the most important lesson is this: patience. Wealth building is a slow process. It's about compounding interest, reinvesting profits, and letting your investments grow over time. It's about resisting the urge to chase quick profits and instead focusing on consistent, sustainable growth. It's about understanding that the path to financial freedom is not a straight line, but a winding road filled with ups and downs, triumphs and setbacks. Remember, the journey to financial freedom begins with a single step. Start investing today and build the future you dream of. The journey may be long and the road may be winding, but the destination is worth every step.